Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, May 29, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? We have a gap down and no rescue operation, a little bit of a change in character for Mrs. Market. Let's go back to something obvious on the chart, have that conversation one more time. We're looking at the candle from last Thursday, which was the 23rd of May. That is a reversal candle. They came up short of the trend line. We talked about this a number of times. But here's the interesting thing. That was the tinfoil hat day situation. That was a full moon. And I say this in the live trading room all the time. We talk about things have an ending, then there's a new beginning. Everything comes to an end. Everything has a beginning and an end. So the market found a new beginning shortly after the full moon on May 23rd. Last night, we talked about this little shimmy situation over here. All of a sudden, this market today, yesterday, maybe it's one day short, but this little setup looks very similar to what's going on now. That doesn't mean directly we're going to see the next 6 or 7 days of downward pressure. However, it looks similar. This could be the beginning of a more prolonged correction than just 1 or 2 days. We'll know more if she gets below and closes below the low from the 23rd of May. 524.72 is that number. Today's low, 525.37, not close. We also have something else over there that's interesting from a number perspective. We have a former breakout area. The folks in the live room have seen this on my chart each and every day. The high is 524.61. That is the most recent breakout area. The market gapped above it on the 15th of May. They made a test in the neighborhood, but never touched that place, and that's okay. The test was qualified. They did it on the 23rd. So is that place support, or is it one of those, the luster is off? Well, it is the latter of the two. The luster is off it from a trading perspective. However, it is important because it is the most recent breakout area, and if the market stays above that line, 524.61, she remains in the bull camp. If she gets below that line, fills this gap over here, the gap officially is 520.56. No, it's not. It's 523.30. If she gets below that gap, there's a more prolonged / corrective period coming. Remember, we talked about the weekly chart yesterday. You're in an on-time type of situation with, mind you, with a sign and or signal of a trend change. From a weekly chart perspective, they certainly hit the trend line from a visual perspective. We'll go with it's the trend line, give or take. We say that all the time. This was a pretty darn good example. Yesterday, we looked at the 4-hour chart. We had that wedge-ish situation going on, not definitive, but here we are trading lower today. Go to a 2-hour chart. Again, same routine. You had a gap down, goes sideways. So this is another bearish, flaggish, eating time off the clock-ish situation. They were not able to recover today and break the chain, as I like to say, of this current bearish, flaggish formation. You could see it clear as day on the hourly chart. Market gaps down, so there's your flagpole, and this is a typical bearish, flaggish situation. Here's your flag that was forming today. So either they break the chain and they go up tomorrow, fill this gap, and so on in the northern direction, or they have the follow through or the completion or the continuation of the bearish, flaggish formation situation. Switch the thought process to a swing trade thought process for a moment. Think in terms of, what do you have? You have long trades, you have short trades. We were overweighted in the long trades on the way up from the recent low. The system, the automagical swing trade system, started piling in the short trades. We've taken profit in the longs. We have some left that haven't had profit. We have profit on the short trades, and we're continuing to realize profit in the short trades as the market comes lower. Automagical lazy swing trader algo system. This was a case in point from a short trade perspective. This is JETS, which is an exchange-traded product housing the airline and associated stocks. Shorted it at 21.37, nailed the high to the penny. The high was 21.38. Funny how that works. First profit 20.52, second profit today at 19.37. How you doing? Play them on the long side, play them on the short side. Let the lazy swing trader automagical algo system do its thing. Here's a list of the recent closed positions. Some of them are still open. Some of these are first targets. Some of them are closed. But you can see here, 7%, 7%, 5%. There's a loss, 2.5%, 8%, 6%. Here's a loss, less than 5%. Here's a win, 5%, a small win, 4%, 6%, almost 7%. Here's a push. Here's a little bit of a loss. Here's a 5%, 6%. Here's a loss, 8%. We don't win every trade. You can't win every trade. We win the majority of the trades, 8%, and so on. You could see these are base hits, and they turn into risk-free, emotionless trades where a lot of these are still open with second and or third profit targets. When you add up the total number of trades, the winners versus the losers, it's going to bat around 8 out of 10 are going to be winners. Sometimes a little more, sometimes a little less. All in all, we play both sides of the tape, short and long. The automagical lazy swing trader algo system. Here's a live room day trade situation. Provided the number yesterday to the live room. I said, let them spike $40. The exact number is $39.93. The low of day is $39.94. And you can see what happened after that from a day trading perspective. That was bullseye. Live room, real-time situation, participation, live room. Oh, and by the way, there's more today for sure. We had a quiet couple of weeks in the live room. We had trades, but we didn't have a litany of trades. We had here and there, one or two here and there. All of a sudden today we get some volatility. We had a bit of a bonanza today for many members in the live trading room. We'll get there. How about this one? One of the members brings up Kava Group today as it's falling. Here's my number, 74.40. Traders jumped in. Guess what happened? Ripped it back up in the other direction from a low today of 74.26. 74.40 provided for members in the live room before the market got there in real time. Live trading room, bit of a bonanza today. See what I was saying? And there's more. Volatility is a trader's best friend. Let's see what we had from the get-go today at 0:30 and what was in the notes. Getting our feet wet with the volatility is a trader's best friend situation. There's a bull case, there's a bear case. We're interested in the bear case today, staying below a bear pivot we identified at 528.30. Keeps the door open for yesterday's low at 527.11. Remember this, write this down. This is going to come into play. It's very, very important. Why is yesterday's low important? You'll see it in a moment. We had it flagged from the get-go today. There's a gap just below and under 526 and an important number at 525.70. Write that down. Why is that important? Well, right of the vertical is today's activity. You can see the horizontal line is what? 525.70. Look here at the end of the day, all the way down to the right. You could see the importance at the end of the day, but we're interested in trading time, which is in the morning session, and you could see what happened. Took a little time, but once they established support down there at that price, they started trading away. They gave us the trade, and we're going to call this a stand-up double. Some traders turned it into a triple. Remember that 527.11, yesterday's low situation? That was our target on the long trade. How you doing? It wasn't our first exit from a trading perspective. However, that was our target and a must exit place on the day trade this morning. We didn't know if they could go higher. I was trying to hold one exit left, meaning I still had a small trailing position. So did some other traders. They didn't give it to us. That's fine. But we got multiple exits leading up to 527.11, give or take. How you doing? So we pretty much nailed the low, and then we nailed the high. And that, my friends, is what the traders in the live room and inside the numbers signed up for. It's all in the notes. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. I'm going to paraphrase a couple of things here. You can read all this. What I'm going to do is boil it down. We had 525.70, just below is 525.15. They never got there. Then you had that former breakout area. It's 524.61. There's a little typo in there. 524.61 is that breakout area we talked about on the chart just before. So we're focused on 525.70, even down to around 525, give or take. And if they spike that, there's the breakout area. That's our bounce back in the other direction place. That is our support / bounce back zone for the trade. That was the morning trade. And then what happens? And this is all before the market even opens for business. The rescue attempt, and this is also on the bounce, brings you back up to 527, give or take. How you doing? There's our morning schematic. Pause the video, read the notes, go back to the chart, and double check the work. No change at 925. They're opening right on top of the support zone. Same thing, 932, opening in the zone, already bouncing a little, and so on. So you could see this was all in here from the get-go today. The market came into a number, into a zone, bounced back in the other direction, gave us the morning trade. That's what you signed up for. Let's take a look at some stocks on the move on the board today. We got COP, that hit its entry objective. Meta did not. Love did. Moderna did. And AAP did. So we'll take a look at all the charts except for the one that didn't, and Meta. Conoco bounced around at the first price, came down toward the second, never got there, back to the first. We'll just call this one a dud, no harm, no foul. They basically ate time off the clock all day long, around 115, give or take. Love, as you could see, opened below the first number, never went to the second, came up penny short of the second and bounced back. So from an official standpoint, this was off the board. It was a no trade because opening below 25.30 takes this number off the board. It doesn't exist. Now when you look at it, they never got to the number. But they were in the zone. That was certainly a support zone. Just came up a few pennies short, like 9 cents, I believe, of the 24.53. The numbers work. Here we have Moderna, 143.75, 141.70. There's your zone. Came into the zone, bounced back in the other direction. That's by design. That's what's supposed to happen. That's what did happen. Like I said, the numbers work. And then you have, last but not least, Advanced Auto, AAP. Now this one was interesting. And look at what happened here. And we looked at this, and I was talking about this in real time in the live room. So they opened below this. It's off the board. Doesn't exist. They opened below the second price. Off the board. Doesn't exist. Now, once they opened and they started going lower, I said to the folks in the live room, hey, look, it looks like they have to go near 60, at 60, spike 60. Low of day was 60.61. They came immediately back, and you could see what happened. 62.48 was the only entry we had on the board, and immediately, within minutes, this thing was on a rocket ride all the way back up past $67. And we did have participation in the live room. That was a nice trade, as they say in the trading parlance. What about Camp IWM? Well, it's the same routine as the spiders. They had relative weakness today against the spiders. They were down about 2-for-1 against the percentage of the spiders' decline. It is my favorite market leading indicator, and they were leading to the downside. What do we have? Well, pretty simple here. We have this low, which was a gap higher open. That was the low on that day. They'll play defense. There's generally a bull-bear battle at that place. You get below that place, and guess what happens? The next place is the gap down here. And look where you are. If you're at the gap down there, you're already at the 100 period or below the 100 period moving average. You're already below 3 out of the 4 moving averages that I pay attention to. So you could see what happens if we get another down day or two in the IWM or across the broader market. There's trouble in paradise. And this is a correction happening in real time. This is not a collapse. This is not a crash. This is a corrective move, which is normal garden variety. When markets go up a lot, they pull back or they go sideways and need time off the clock. They'll put in a higher low and they'll go up again, most likely. One day that won't happen. I don't believe we're at that day just yet. My second favorite market leading indicator, but a number one canary in the coal mine, is what? The folks down at the transportation department. Why is that? Well, we've been watching this every single day for a couple of weeks now, and I've been saying it over and over and over again, live room in these videos. There's something going on here. The transports are tipping their hand. It's a hint, if you will, and it certainly has been. You could see more clearly on the weekly chart, they're coming down into right now the 200 or 100 period moving average with the 200 right below, and the 200 period moving average coincides with a pretty important price area, 14.425. Maybe it's a spike of 14.400 in that neighborhood. That is a big time spot. The DJT, canary in the coal mine, a pretty good indicator of what's to come, generally speaking. A market-leading indicator. How long have I been discussing this? For years. How often does it work? The large majority of the time. Been talking about it for days and days now. What about the Q people? Down 0.7%, about on par with the spiders. It's just a down day. There's nothing catastrophic here. You're well above all the moving averages. Eating time off the clock is a corrective move. No real selling type pressure in the NASDAQ just yet, the QQQ. Now, tomorrow, that may be a different story because Salesforce or CRM reported earnings after the bell, and if we take a look at an extended hours quote, you'll see that they've been escorted back behind the woodshed. Seems like they haven't got shot 3 times yet, but they certainly got shot twice back there. They're down 50 points from where they closed the day, give or take. It's a big move. You go back to a weekly chart just to get a sense for where they are. They're down here at 2.25. This weekly chart, 200 period moving average as I make this video. That's a big decline. And on the way down, they're blowing through a lot of stuff. We'll see how she opens tomorrow. Anything could happen. She could back at the flat line tomorrow by the open. For all we know, we don't know. But this is certainly not going to be helpful to Queen QQQ. XLF pulling back a little bit. They're either going to put in a higher low or they're going to break that chain and there's something else developing. Then you go over to the weekly chart and you say, well, if they get below and stay below the 20 period moving average on the weekly chart, that's going to open up the door for another leg lower. The financials are a pretty good proxy across the market as a whole. It's a big component of the S&P. If there's trouble in the financials, there could be and generally is trouble underneath the hood of the overall market. If there's no trouble with the financials, we're not looking for a rug pull in the market. There's a little trouble in the financials right now. We'll see if this corrective move morphs into something more. Before, the weekly chart, they came up short of the 20. If they spike it through and still find support at the 20 period moving average, there's still nothing wrong with the weekly chart uptrend until there is. We take the market one day at a time, one candle at a time. We take her at face value. And we're the umpire calling balls and strikes. What about Smash Mouth? Big up day yesterday on the back of Nvidia. New highs once again. We'll just take this off. We don't need this stuff. This is just in an uptrend. The trend is your friend. Down day today, but it's really not a federal case catastrophic event. It's a down day within an uptrend. Nothing more, nothing less. A little bit extended from home base. So what happens? Market likes to come down a little bit toward home base, eat some time off the clock, let home base creep up to price. That's typical garden variety market behavior. We talk about it all the time because we see it all the time. Market does the same stuff over and over and over again. Nothing really changes in the market sphere. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.